Good evening, traders. Today is Friday, December 13. It's time again to evaluate our portfolio. Let's talk about market first. Uh, Market went down approximately 50 points from previous Friday, and VIX is up mostly one full point from probably about less than 13. Now it's around 14. So how was our portfolio behaved this week? We can see that you can see it on the screen. Our total ES futures position here. Last Friday it was a profit about 10,200. Right now it shows about 10,500 plus. We closed our C5 position ladder, which gave us $900 profit, which not counting here. So it's approximately $1,200 for ES position and profit for the week. For 200,000 account size, it's approximately 0.6%, which is not bad. We expected that profit will probably decrease because VIX is lower than it was a couple of weeks ago. Plus, we start going sideways, so it's not making as much as we did before. I just would like to say it's not bad thing because our strategies has a ballooning effect. So if markets start going down a little or going sideways, uh, we not getting profit so fast and much from our short puts, but at the same time our hedges is not losing. So uh, sooner or later we're gonna get that profit anyway. I just would like to explain you, for example, if we sell just naked put, uh, even that naked put has a positive delta. That delta not increasing our profit. You cannot make more than premium which you get from your short put. But what delta do with our position? It's just an accelerator of the theta. So if market going up, you get from theta more than it's counted, because what is theta? It's premium of the option divided by days till expiration. So it's assuming that this relationship is linear, but if first of all it's not linear, and second, if delta positive and market going up, you get this profit from theta much faster. But in our case, because market is sideways, so profit is slowing down a little, but at the same time, how I said, we don't lose from our hedges. So as soon as time decay work, and we will get our profit anyway, unless it will be big crash, which we actually ready for that because we have a bunch of protective hedges for that. Also, we close our oil position with a full tail profit, more than $1,000, and open new one. That's how it's look like now. It's 63 days till expiration, and we already have some nice about $160 profit. Our mass position, let's see how it look like. We also close the one which is reach tail profit, and let me see. Actually, we didn't. It's still seven days till expiration. Yes, we decided to hold it as a protection for new longer expiration structures, And if market collapse, we can get good profit from this 7 days till expiration ratios. But if market go up or stay here, we don't lose anything because it's right at the tail profit right now. So, but we add new. Let's see the second OMS structure. It's 49 days till expiration right now. It's doing their job, going slowly to tail profit. So our tail profit up a little bit higher than $500. Just don't forget we use here ES for demonstration because OptionNet Explorer don't have MES data. So for ES we just need to divide it by 10. So ES position 10 times bigger than MES position. So right now we are approximately $250 in profit. It's half of tail profit. I think that another probably couple of weeks or maybe 3 weeks, and we will approach our tail profit. And we on Monday opened the third one, which is 70 days till expiration now. It's approximately zero because how I said, if you remember, we opened it on Monday, but market went down 50 points from that. But it was compensated by theta, so we are in very small profit right now. If market will continue go down or up, we will on Monday open the second ratio, add to this position and make it a little bit more safer if market will be down, or we will increase our tail profit. What else? TLT position. Actually TLT went down very much this week, and right now it's approximately at the lowest point. But our position is still in good shape. Probably we will be assigned with long stocks, which we actually plan to do. After that, we will try to get dividends. It's approximately 5% per year, and we will continue to add some more option structure to it to increase that position profitability 2 or even 3 times than just dividend profit. Let's see how our positions on ES look like now, and see what we're gonna do next week, which one is subject for adjustment or addition. The first A ladder. By the way, last week we add A6 and close A5. Wait a sec. Let's do it something like that. Yeah, it's look very well. Approximately 4.5 positive delta has theta approximately 41. So we're safe here, and hopefully we'll continue to perform with a ladder and get in probably 3 weeks or so our max profit, where we gonna roll it again. Let's see our B. B structure. It is 21 days till expiration. It's close to maximum profit, and yes, next week we gonna roll our short puts up and maybe add some protection again. Same way, add vertical hedge 150 DTE approximately, and roll our short puts to approximately 45 DTE at delta 10 to make it safer and more profit potential. Ladder C, how it look like. Yes, here it is. It has 35 days till expiration. Probably we're gonna hold it for one more week and roll it after that. It also has approximately delta 4, which is good. By the way, here I'm talking about delta of SPX, not SPY. So if you do it in SPY, weighted it to SPY, so you have to multiply it by 10. So in SPY delta, it's about 40. Also in good shape and continue making money to us. And ladder D, it is 28 days till expiration. Delta 2, and yes, probably it's also a candidate for roll. If ladder B, we're probably gonna do at the beginning of the week. This one maybe do at the end of week, or maybe on Monday or Tuesday next week. We will see how market will perform during that week. We also have two violins, violin 5, very safe. If you remember, we moved down our protective longs 100 points to increase our tail profit. So now we just wait. It's 35 days till expiration, probably another couple of weeks, and we will close it with good profit. Violin 6 is newer. It's 49 days till expiration. Yeah, it's approximately $850 and plus. We will wait for probably a couple of weeks, and after that we'll roll our longs of H down again to increase our tail profit, the same as we did this week with V5 trade. We also open our mini violin this week. This is how it's look like. It is in small profit, 132. If you remember, violin mini, it's a trade which can be converted to regular violin if market go down, or if our one short put, which is we open at 30 DTE right now, it's 26 DTE, will expire. We will hold that hedge as a free hedge for our portfolio. We already did once with mini violin 1. I would like to show you that. Here it is. Oops, sorry. I didn't close it here. Just a sec, I will close it, that you will see. Yeah, this is how it's look like after our short put expired. You can see that we have a nice delta hedge, which is no lose from upside. This is what we're trying to achieve with mini violin strategy, to get free portfolio hedges. But if market decline and our short put of V6 become at delta 20, we will roll them down to 60 DTEs and double it and make a regular violin trade in good position with probably increased volatility. It's gonna be nice and new trade for us. Also, I have Balalaika trade, which is, we did reposition it this week, and it was lots of questions why we did it, how we did it, and when we should do it. So if you remember, our Balalaika trade is has a couple of short puts with different expirations. Usually we open one of them at 30 DTE, another at 60 DTE, and we protect it with one long-term put, usually 150 DTE. So it's very nice trade and very profitable. But when market go up far and fast, we continue roll our short puts up, and but our protective long puts stay at the same strike. So at some point, a gap between our shorts and longs become too big, and if market starts declining, this long put won't be so effective. So at some time, especially if we're expecting that probability is very high that market start declining, it's time to move up that protective put. But how we do it in our case? We just convert our long put, which is, let me see, yeah, it's 108 days till expiration. We just convert it to vertical hedge. So we just sell, here it is. Can you see we had 3 long puts at approximately delta 7, and we sell in 3 against it 500 points below to create just our regular vertical hedge. But at the same time, we open at 150 DTE new hedge long puts at delta 10 again. In our case right now 9.5. So right now we have a new long put as a hedge, plus we have verticals which are gonna protect us even better. And we roll, as we usually do, our short puts, one of them back at delta at 30 DTE, in our case at 31, approximately at delta 10, and another one we keep at the same expiration, which is right now 49 DTE. So we did the same thing which we usually do with our balalaika, with our shorts, except we just change our protection. Again, we open new 150 DTE at delta 10 and convert old one to vertical hedge. This is how we do it. Now we are much more protective. Our hedges will be much more effective, and if markets start declining, we will be in better shape than usual. That's it for today. I don't have anything else. Questions. I had a question about this our adjustment of balalaika, but I think I covered it. So thank you very much, guys. Have a good weekend and stay safe. Bye bye.